Hey, what's going on, everybody? It's me, and then there was Tillman. Oh, wait, there he is. Andrew is skipping out as usual, goofing off, doing things that actually make him money. How dare he? But nonetheless, we've got Tillman here and myself, of course. Welcome to Beards and Bitcoin. I've got my orange Bitcoin shirt on, giving it some support, because we had the pop up yesterday.
I can't even hear you, Chris. I got to log off and log back on.
Oh, man. Can anybody else hear me? Let me ask you real quick. Can you guys hear me out there? Let's see if it's just Tillman or if it's me. Somebody let me know, please and thank you. Real quick here. Somebody, anybody. You can do it. You can hear me, Bernardo. Roy, you can hear us. Okay. So it was just a Tillman thing there. He had to log off and log back in. I appreciate you guys letting us know here. Maybe Tillman can hear me now.
I can hear you now.
You can hear me now. All right.
I can hear you now, like the old commercials.
There you go. Throw back the old commercial, right? Yeah. But anyway, yeah. So, again, Bitcoin had a nice little bump up yesterday and a not so nice little bump back down yesterday, following through. And then here we are, maybe trying to bump back up again. So we'll see how it goes. Ultimately,
it's called volatility. I think that's what we bought, didn't we? Literally the vehicle, every investment vehicle, if you wanted to deduce it down to a simple numeric value, you could do that on its volatility. And you could very easily deduce where you wanted to place your money long term, and you could deduce exactly what the risk profile is. Volatility goes hand in hand with risk. And when you have an asset that has a potential of capturing trillions of dollars of market cap this year, that's a lot of upside. I mean, if you think about, I remember a time where there's been two probably meaningful milestones in my memory that I'll never forget as it pertains to Bitcoin. Maybe three. First one, when we hit $1,000. Yeah. Everybody thought it was over. I did too, man. I sold a lot at 1,200 thinking this is, but that was a meaningful one. I think that crossing the 100,000 mark was obviously a major milestone in people's heads. And so, you have this historical log of kind of, we're old. It's like wisdom. You've been through these cycles, what it can do. And so I'm sitting here going, from here to 1 million is a lot more certain than from 1,000 to 100,000. So much. So is today Bitcoin more of a solid investment to hold than it was then? Yes. Yeah. Does it still have upside volatility compared to all other asset classes, which is what I want in that asset or that allocation? Yes. Then it's perfect for that specific, piece of the portfolio. The question is, how big are the pieces? And I think that is where the minds collide, because in our industry, as you know, the rule of thumb has been, over 80%, or you're not a true follower of the coin. That's right. And that's just not how traditional finance thinks,
And let's face it, we're if we're not there yet, we're pretty dang close. I mean, institutional investment has been insane. We talked about that as as we came into 2024 when the the ETFs launched, coming in there. And ever since then, I mean, let's face it, everything we've talked about on here is pretty much happening, but it's happening at such a significantly faster rate than what we even thought about. And we were pretty aggressive with what we were thinking about.
I think it's a get in while you can fit in type thing. Legislation is finally cleared up. I think there's a summit today or tomorrow, isn't there, in Washington with all the
something like that. Yeah.
Yeah, that's a pretty big piece of news. We were talking about that on Melker Show yesterday, but it's a list of everyone in the crypto space. Brian Armstrong, CEO of Coinbase, he'll be there. But it's about, but the thing that was interesting is on that list of participants It was a bunch of crypto DeFi CEOs too. So I think this is a last ditch effort to get the smartest people in a room that can actually write a bill that makes sense, because it doesn't make sense. Like they don't understand the technology well enough to write anything that's going to be, lasting or followed, because they don't even understand this whole world, right? Yeah. So how does legislation get written in a way that actually means something without bringing those people in? Well, I don't think it does. And I think that's the reason why they're getting brought in. And I think they're not getting brought in as a, hey, welcome to Washington. I think they're going to get brought in and go, we need to fix it. And we need something on paper now. And it's about getting something written that's bipartisan, because this is being called by the Dems, right?
Yeah.
Credit to them. I'm not a Democrat, but I'm also not a Republican, honestly. So the point is within 20 minutes of that meeting getting called with these heads, guess what the Republicans did? Well, we want to have a meeting while y'all are all in town too. So here's the good news, though. If we can just get something on paper that both parties can shake hands about, then we'll be the leader in the world. Isn't that what we want? I mean, you're not going to stop this train. So you either embrace it or you resist it until you embrace it. And all of the time that passes, but when you're resisting it, is lost opportunity. It's just huge gaps in wealth that you're robbing the American people of being able to participate in, because the easier the pathway for them to participate in this market or build technology that operates in this ecosystem with smart contracts, the more innovation we're going to be at the forefront of on the world stage. That's what look at what's being done in the financial sector through DeFi right now.
Yeah.
Well, what if we were teaching that in our schools? Don't you think that would be a good thing? Don't you think if that common ninth grader knew what DeFi was and was getting to understand how the future of banking looked? Because the future of banking does not include human beings passing pieces of paper to each other. That's crazy. And so, we're here. You're not going to put this genie back in the bottle. We might as well embrace it. And so let's get the handshaking going, and let's get the pieces of paper getting passed.
So what do you mean? No more of the handwritten notes underneath the desk? Do you like me? Check yes or no. No more of that with the banks.
Listen, money is a very hard thing to control. And the more physical it is, the harder it is to control.
Yeah.
They used to have these desks. My dad has one that I'm actually going to put in my office, and it's called a partner's desk. And it's like literally what you would envision in that movie with, I think it's actually in the movie, but the movie of the Three Ghosts of Christmas Past.
Yeah.
Scrooge is sitting at one of these desks, and another guy, his accountant, is sitting at the other side, and they face each other, and there's money in the middle. And that was an old partner's desk because the owner of the business wanted to keep an eye on the money while the accountant was counting it. The bookkeeper was counting it. And so that's how stringent it had to be when you were counting coins. Think about now the freedom that we have in blockchain. You don't need human beings double checking stuff. And, just think about how it's cumbersome. Go do a wire transfer.
I do every month.
I do too. And they're the biggest pain in the butt.
Yes.
You have to have banks call you, verify no matter what you're doing.
My bank now has us do a video call now even. It's not even just a call anymore. Now it's a video
nuts. It's nuts. But here's the thing. It's instant settlement, and they have to do that because it's instant settlement, and they can't make mistakes with instant settlement. Blockchain's instant settlement, and you don't have to do any of that stuff. I mean, it's just like, this is absolute no-brainer is the point. Once you use the tech, I think that's the light bulb moment that says this is the future.
Yeah, but so we're getting to this point now where we're 15 years into Bitcoin basically, and you're seeing a lot of
16
years, yeah, but we're seeing a lot of the what do you call it, the ethos, right? The really coarse stuff that people shouted for so long now kind of going to the wayside, right? So like we talk about the title of the show there, is Bitcoin's self-custody era going? Is it ending? And I said that because if we'll look here on this article we've got right here, right? This is on Cointelegraph. Says another nail in the coffin of original crypto spirit. Whales ditch self-custody for ETFs. Now, this is something you and I and Andrew have spoken about multiple times over the last year and a half about how, there's those of us who are, you can really look at it as kind of like up to 2017, 2018, and then afterward, right? And the further afterward we get to that, the less people are concerned with actually holding their crypto, right? And so what we're seeing is these wealthy Bitcoin holders are moving their billions into ETFs like BlackRock's IBIT because of tax benefits and SEC rule changes, which just make more sense for them, right? Convenient.
Well, there's one. So here's the way I look at this. If there's an equal value proposition between self-custody and ETFs, the winner is ETFs, right? If there is a greater value proposition on either side, the liquidity is going to flow to that side. And so, yes, I do believe that right now, there is a lot of value in ETFs versus physical. There's a lot of risk in holding physical. You can make mistakes. Fat finger errors can cost you everything. There's no insurance products. There's no third-party custodian oversight. It's just you and yourself, yourself and Irene.
You're in the long wallet address.
Yeah, you are everything. So that, just from a risk perspective alone, having more people involved in a decision makes it less risky by definition. So, just take that for what it's worth. But then you also then go into the tax benefits, the borrowability. If I own ETFs that have gold upside attached to them, I can borrow against those. Yeah. I can't borrow easily against Bitcoin physically right now. But all of that is also, there's a reply on the horizon from DeFi. If DeFi becomes interoperable with your bank, whereby which you can participate and bridge money through a stable coin, I believe that's coming. DeFi offers so much more yield opportunities that the money that you can make on that side of the fence will trump the quote benefits of taxes and whatever else that you've got right now on the ETFs. And so the beauty is it's a competing landscape, right? You've got decentralized, non-personnel driven products and solutions to these problems being created. And you also have the centralized versions through exchanges. Pick your poison. It's and both. You can't stop either, because the centralized version now, they're all chasing the leaders of the group. Every major company is doing this. So if you're not doing it, you're dying. You're losing customers because your customers are going kind of like, hey, are these guys so fat and happy they're not giving me the latest and greatest, or what? It underpins confidence when you are able to talk on subject matters that are literally on the news 24/7 on every financial network now. Like you can't watch any of the networks and not go, I kind of know what Bitcoin is. You may have a strong opinion the other way about it, but you've heard about it.
You heard about it, yeah, exactly. Yeah. But some of the purists, the maximalists, the maxis, right? They're gonna argue and they're gonna be upset about it, and it is what it is. But this is something we talked about again, back in a year and a half ago, where we said, listen, this is going mainstream, this is going Wall Street. And because it is, necessarily things will change. These things that are happening now
aren't running a node and aren't running miners. Because if you run a node and you run miners, me and Chris can send money to each other called Bitcoin without anybody's help.
Yeah.
We don't need anybody. You have to have confidence in what Bitcoin is. Bitcoin isn't going away. Bitcoin is literally the system, the set of rails by which the TradFi system is going to have to mimic and copy and incentivize additional compensation for you to avoid using. Yeah. It's going to be every centralized is going to give you stuff on top of what the or Bitcoin can give you. I can promise you that. Why? Because there's value in them holding it. And they're making money on them holding it. And they're willing to give you a little bit of that money so that you keep it with them. And that's the whole model of AUM-based money management. Like the more money you hold, the more money you make. And so you give away a lot of that money and incentives to get the volume that you need to make it. And so you're talking about Bitcoin being the shining example of all of the attributes that we all know it to be. And the central version of it is going to have to be a plus interest, plus it's going to be a plus something, plus something of value.
I mean, do you think about it? I mean, if you're lending, right? If you're a bank or you're a lender and mortgage something, right? And you're like, man, listen, all right, so here's the thing. I'm going to loan you money against Bitcoin. I mean, as long as you really believe in Bitcoin and, you see its future there, you are in a win-win-win for yourself situation, right? They either pay back the loan with the interest, boo, you made money, right? They don't, and you take the Bitcoin. And if if you're set up to the point, especially that you can hold the Bitcoin for a bit, well, you're going to get appreciation on that. I mean,
your collateral is growing against your debt value on a very high rate. Think about that. Like you most times the collateral on a sorry, I gotta drink this soda water, but the collateral value of assets typically goes down against a loan's term, right? A car gets less valuable.
Well, even if you put in money, right? Like they said, like you put in 40% in cash to take out the loan, right? I mean, and they're holding your 40% in cash. We all know cash goes
going down.
Yeah.
But cars are a steeper curve, so you can kind of see it more easily, right? Yeah. You got to look at the inflation rate over typically, except for the COVID environment, you typically judge it on a 10-year or 20-year basis, right? It's a longer decline in purchasing power. But Bitcoin is going to be the shining example that can't be destroyed, can't be censored, can't be, it is Bitcoin. It will remain Bitcoin. But everything that's built as an adjunct to Bitcoin or as a derivative product of Bitcoin will have to offer you more than the base offering. Or you
do it, right?
Or you're just going to go back to owning Bitcoin.
Now again, one of those things that it offers you, right? I mean, whether maxis want to, admit it or not, is really what we were talking about at the beginning there, which is this idea that it is risky to hold it, right? It's risky to send it. It just takes you to screw up one time on the
those are misnomers that are just ingrained in us based upon the media FUD that's out there. Let's talk about the risk of holding it, okay? What is the risk of holding it if you have no selling pressure?
Okay, let me. You maybe think you're thinking something different. When I say risk of holding it, I mean you can go online and do something. People are stupid, right? They're going to go to sites.
Okay, risk of holding in terms of you can lose it.
Yeah, somebody can siphon your wallet or whatnot, right? Yeah, that's
or if you're holding it on an exchange. Lost his XRP that's blanketed all over social right now. Have you seen that guy?
Do it? What now?
There's a guy that lost like $3 million, bless his heart, and he's sobbing on his porch. And you never know if stories are real. It looks very genuine and authentic to me at first blush, and it's just this painful example of he doesn't even know what he did wrong. But it's gone. And so, whether it was malware on his phone and he was using a hot wallet, or whether you just don't know. And he had everything, his entire life savings, and like $3 million+ of XRP. And so, to that point, is there a point where knowing what I know now, Is there a point where I would have been in his shoes? Absolutely. Yes. I've been in his shoes, but I don't get in his shoes anymore. I don't ever get over committed. You can't trust anyone to hold the basket if all your eggs are in it.
Yeah. Yeah.
Including you.
Exactly.
So don't put all your eggs in one basket. So people trip, accidents happen. And so, it's just like anything. You could have all your money in one bank and the bank could go under and they give you FDIC gives you a $250,000 check and says, thank you for doing business with us. There's pitfalls everywhere. And so you have to just anticipate that being the cost of doing business to life, right? You're going to lose money. You're going to have insurance claims that get denied. You're going to have all sorts of crap that is outside of your control happen to you. That's going to cost you money, and a lot of money. That's not the point. The point is how well have you diversified so that is a X percent, smaller than 5% of your overall cash value. And if you do that, if you have less than 5% of cash value in Bitcoin and it goes to zero, so what? It was a heck of a bet for 5%. Like, it could have ended up being 100% of your net worth.
So what you're saying is the only thing you control is how much you lose.
I'm actually saying the only thing you can control is how much you make, but
you don't control how much you make, right? Because you don't control the value of it increasing. All you can control is if it goes down or if you lose it or whatever, is how much that you actually lose, right? That's all you really can control at the end of the day. You might get lucky and say, hey, I want to go long on it and hold it, and it goes long and it makes you money. But
that could be vaguely true. Even if I agreed with you and said it was true, it shouldn't be your tagline for the end of all podcasts. It's not strong.
Man. It really is, honestly, at the end of the day, when it comes to Bitcoin, it really is meant to be a reminder that exactly what you just said. You can't just go into it and just pretend like there's no potential risk, right? Anything can happen, just like you said. Anything can happen, from the price going down to you inadvertently hit a link that you shouldn't be hitting or visit a site you shouldn't be visiting and it drains your wallet, to the exchange going down and the CEO is dead and it was the only person that knew the seed phrases on the wallet, so now you can't get it. And really it is just a reminder to listen. Life is not about guarantees as much as we want it to be. Life, it is risky being alive.
And you don't have to take as much risk as you think if you understand the laws of compounding. That is where the laws of compounding is like the Achilles heel of risk. It's an exponential curve if you stay on it long enough. And so I had this conversation with a young guy last week that had everything in one coin. It's like just overloaded. And I said, why would you risk it? That's a lot. That's everything to you. And this is not a known coin. This is like a new project that's like up and coming, and I've been there. And he said, well, that's the only way I can guarantee millions in profit. And I said, well, I don't agree with you.
Yeah.
I think you probably have a time horizon that's different than mine for you, but let's take the same money and let's do it the way that I would suggest would be less risky. So whatever you believing in as being the next parabolic move, if you're right, you will be, wealthy and handsomely rewarded for it. And that you're really, though, the ticket you're buying is that it happens in the next year.
Yeah.
Because this project, if it doesn't grow over the next year, if it doesn't gain steam, the likelihood of it working out as your ticket out is going down at that point, not up. You're actually you're on the losing horse now.
Yeah.
And you're buying just your own deception in terms of staying on the losing horse. So, you have that option, or Bitcoin is beyond the point of, knowing whether the horse is going to die or not. It's won the race. The proof of work network, it will never be used in the way that Bitcoin used it. It is 95% through its inflationary curve. It's all out in supply. major institutions, global financial market makers, they all hold it. So you're amongst a great group of people. So what if you said, okay, you appropriated that same amount of capital into Bitcoin now? Let's just for example, for easy math purposes, call it 1 Bitcoin. It's a lot of money to a lot of people. $109,000 or wherever we are right now, 108.3.
Something like that. Yeah.
Yeah. So you got $108,000. You can ape into a meme coin, and you can try to make the $10 million lick, because that's what everybody's thinking about. 10 million. Okay. Or let's say you put that into Bitcoin and you believe Michael Saylor. Michael Saylor believes it'll be $13 million a coin. There's a lot of people. Let's just say you believe in 10 years, it will be the same value as today's gold's market cap. That it doesn't even catch gold, but it just kind of moves with gold, and gold doubles in the next 10 years and Bitcoin doubles in the next 10 years because it's just catching money and it really doesn't provide any value other than another asset of diversification. Even if that's the case, Bitcoin's $1 million in 10 years. Okay. So that 100 grand now, you're well on your way. I mean, dude, you've now got $1 million and you're in your 30s. That is so much. You've eaten up the first 20 years of accumulation, hard work that it's needed to get into the accelerated curve portion of the compounding curve. You now have $1 million plus in cash that you could put in something that earns you 8% compounding interest with no risk, like zero risk. And that's $80,000 a year plus that you're getting. So let's say you keep a job for the next 10 years and you reinvest that 80,000. Now you're on the compounding curve to be free financially for the rest of your life. So now the pressure is off about really making money in your primary job. Go do something that you love. Go work in a fly shop and make $50,000 a year, because as long as you can eat and live off of that and you're debt free, you're making $80K plus a year from now on for the rest of your life, just by sitting on that $1 million. And you could do that in a very short period of time relative to the risk that you're exposed to in that time period. That's the basis case. That's the base case for Bitcoin, as far as I'm concerned. And that's what I would tell somebody that's in their 20s that has 100K in crap coins versus the 10-year look on Bitcoin.
Well, and let me again point out, as I love to do, the risk that you mentioned with the altcoin is just one risk, right? This idea that it won't catch on and go on. The bigger reality is most people, if they get into a situation where it takes off quickly, they get out way early. They big plans at the beginning. Oh, I'm going to hold until it gets blah, blah, blah. But all of a sudden their money doubles or triples and they're like, oh, great. And then it starts pulling back and then they get scared and then they get out and then they're too scared to get back in. It takes off and eventually does what they were thinking. They don't ride it there anyway. So there's, let's be realistic about human nature on top of it. We all like to think we're special. We all like to think that we're going to do things that most people aren't going to do. But guess what? It's a bunch of nonsense. The reality is we're going to do what humans tend to do most likely. And so when we're looking at risk, I think that, and unfortunately, most people aren't even looking at risk. But the way you're discussing risk here, I think, is really important, right? The basis of everything I do, everything I teach when it comes to markets is about risk first, right? It's always, you get new traders and new investors come up to me, they're like, oh, but what if it does this? What if it does that? I'm like, but what if it doesn't? What is your risk adjusted return? How much
listen, let's stop on that, because this is a beautiful point. This is absolutely gold right here. And if I had learned this in my 20s, I would be infinitely more wealthy. Yep. But like the risk of losing that 100K, you have a 2% probability of the home run hit that you're going after. You have a 98% probability of losing it. And what you're really losing is time on the curve. And time is the only thing that matters.
Yep.
So the way to riches is by compounding on compounding over long periods of time. Well, you
Yes.
don't have that option when you're old. You know,
Right.
you do not have that option. So this is a strategy that can only be executed by the young, or somebody that has at least 20-year horizon, 25-year horizon on the money. You know, if you're 60 and 65, yeah, you're going to have some compounding, but by the time you get to the fun part,
Go ahead, say it, man. Say it. We're
it's
both
going
getting
to
there.
somebody else. You know what I mean?
Yeah.
Or even if you live to be 100, you still are going to be spending that money on someone else, because the reality is you're not going to be in a period of your life where you're going to be doing skydiving
No
and going to college.
no
And
bouncy
you're
houses.
done. You're going to be sitting there drinking tea. You're going to be buying the fanciest coffee and tea that you can buy. But as it relates to your spend, you're not going to need it. But here's where I think the curve goes crazy. Like, we estimated it that you getting $1 million Bitcoin in 10 years. And that's taking it to a $22 trillion market cap, which is what gold's at right now. Maybe even higher now. But
I think it's a lot higher now, actually.
what if you made 300 grand? What if you made 500 grand? What if you made on that other project, you made a 3x and 5x, but you risked 98% failure to get there? Well, if you look at Bitcoin, to me, it's a certainty that it goes to $1 million over the next 10 years. That to me is that's the 95% certainty in my mind. And let's just say you want to stretch it out and say 15 years. Great, fine. Find a year you're going to be alive and it's going to be there. What if it's 2 million or 3 million? What if it goes up a lot higher? What if it goes and catches gold? Right now, what if it catches gold in the next 3 years? Are you prepared for missing out on that? Because that would put you in a position with a $100,000 investment to have $3 million under your belt. That's you making 200 grand a year doing nothing and living very comfortably for the rest of your life and having a family. And that's not counting if Bitcoin continues to grow with gold and all other commodities. If it does, right, then that number is only growing with it. And that is what we mean by creating an income loop that outpaces the inflation loop. If you do that, you win.
Yeah, you win.
It plus your expenses, right? If you can have your income loop eat up all the inflationary losses and your income losses and grow and compound, and you're young, you have 100% certainty of being wealthy if you apply this. Like, you can't do it when you're 80, but you can now.
Yeah, and the hard part is not in that explanation. The hard part is in getting people to open their eyes and see it, right? Everybody wants it today. And here's the thing, you're wiser, like myself, the gray in the beard says it. But when we were younger, before, there was all this DeFi and all these alts, and before it was all this stuff, people were still like, okay, well, how do I get rich quick? Now everybody's online, everybody's on social media, everybody, is like, man, it's a lottery ticket to be in crypto. And that's all I'm thinking, YOLO and whatever else. And what's the reality, though? Most of the reality is what it's always been, which is most people are going to lose it.
That's fine if you want to do that.
People, right?
But you don't follow in the footsteps of all the losers in front of you that have done it.
But that's
I love reading James Wynn's tweets. I'm not calling him a loser, but I'm saying he lost a lot of money. So the trade was a losing trade. I mean, it was a spectacle trade. I mean, of all spectacles, $1 billion, from rags to riches story. It was unbelievable.
Rags to riches, back to rags.
Well, yeah. And so here's my point. He's lying to himself and others if he doesn't wish that he had taken 20% profit off the table of every one of those trades.
Oh yeah.
That's just nuts to think that. And 20% in my mind should be the Gamblers Anonymous one phone call away number. You know what I mean? Like, I think you should be ripping 50% plus off of these type of events, because in my mind, you as a trader need to be saying, is the asymmetric risk reward returns that I just earned an anomaly or something I can replicate on a reoccurring basis? And if you think you can replicate it on a reoccurring basis, then you're going to be the next Bill Gates. Congratulations, and you'll do it in the next 5 years, because that's the rate of compounding that type of number ends up being. You're in the billions very quickly if you're pressing at 100x leverage like James was, and betting $1 billion at every turn. But you also go broke real quick.
Scott Schwartz here in our audience has a question. I think a lot of people are maybe thinking as well, is don't you mess up the retirement plan by selling Bitcoin and putting it into cash to live off an interest rate that doesn't beat the hurdle rate?
You do, but you are the priority, not your money. Your money is working for you. You have to take a mindset, in my opinion, that everything is about you and your lifestyle. Now, the sacrifices that you're willing to make, specifically when you're earning your first 100 grand of investable capital, they can be extreme. You can shorten that. I know guys who are penniless, fatherless, countryless, that in a 3-year period of time put together $250,000 of savings in the 80s, 90s, 2000s, and recently. There's examples across the board, is the point. Yeah. If you want it and you're willing to eat gruel and ramen noodles 24/7, you can build money up pretty quickly. The problem is we like to spend it, and that's not a bad thing. But there is a mindset where you realize that the amount of money that you spend in order to be happy and put your kids in college and do those things, that can be earned without effort.
Yeah.
And it can be a passive income. And that's what all the rich people do. That's why they're able to go on 17 vacations a year, because they don't have whatever they're doing for their money pales in comparison to what their money is doing for them. And that is the secret. And you can have money represented in real estate. If you got $20 million in real estate out there, an average ticket price of $500,000 to $1 million homes, you have 20 plus homes, 30 plus homes in your portfolio. Let's say you're bringing in, $2,000 to free cash flow a month on all those. You're done. It's not like you got that money in the bank, but you have cash flow because you have wealth, and that cash flow is paying for your lifestyle and allowing you to make speculative investments at a much higher risk rate. Now you can start investing in the more risky things. People get it backwards, and they put their hard-earned money in the risky stuff, and then they put they think it's the vice versa. No, put your hard-earned money in something that 10 years from now with a high degree of certainty is going to be a lot more valuable, right?
I think it's absolutely a great point. I started out, I'm where I'm at today, which is great, but I didn't start out here, right? So I started out the same as most Gen Xers, right? I came up, parents were like, you got to do good in school. You got to go to college and get a degree. You got to win there, parents were, middle class, it's all about saving money and whatever, all these things that actually aren't really the best thing, right? And so I had to unlearn all that as I became an adult, and to get onto my road to where I am today. But a lot of people are still stuck in that, right? And so, like you said, then they revert to that thought of, okay, well, I've got this money here, and so you've said these couple of great points here. First one being, well, I've got this money, so I can't put it into Bitcoin because it's not going to turn $100 into $1 million next week. And so, so again, it's that whole idea of, well, I need to put my money that I don't really, it's just that little bit extra I have, right? I'm going to put it into something super risky because in my mind, it has to work. I'm already spending what's, I'm already buying my Lambo, my private island, whatever, and it hasn't moved 2 cents. And you get caught. And so the thing, I've constantly talked to people about is this idea of, listen, if the greatest percentage of people are doing the same thing, and that greatest percentage of the people are also not successful, they're losing money, then you absolutely have to do something different than what they're doing. But yet we see, especially in trading, we see people come in and they do the same thing. And I can say this from a point of experience, 31 years in the markets, starting in equities, coming forward into futures and FX and crypto and energy and, precious metals and all this stuff. Every market, every, start of a bull run, end of a bull run, it's always the same type of people that come in and they make the same mistakes, which is why historically consistent, almost every retail trader that comes in loses money, they lose pretty quickly, and then they're back out. But yet everybody comes in doing those same things. So it's a thought process that we need to change. Again, going back to myself, I had to unlearn all those things I was taught growing up, right?
Well,
I had
easy money is how the casino thrives on easy money, right? There's nobody that's going to look out for you in this situation. Everybody makes money you being dumb in the markets. The dumber you are, the more likely you are. It's like you're sitting down at a table with a bunch of pro poker players that play with each other every night, and you're the guy from out of town, and you don't know it, but they sure do. And the markets are like that. That is what everybody. And so the game is rigged, and the only way you win it is by moving in darkness, moving in markets that don't mean anything, buying when no one cares, looking at stuff that has once had a bloom on its rose, that probably under right market conditions will have another heyday in the sun, and looking how far from grace it's fallen, and looking at management and the people behind it and going, they're going to have another heyday. They're going to have another day in the sun. I don't know when, but I'm willing to bet on them. And then you place your money in that bet. And then guess what? You have to, if you ever are putting money in an investment and you are the forced seller, you're your own worst enemy. Being a forced seller is the biggest risk of any trade. What do I mean by that? I mean by that I'm greedy and I put too much money in a trade. And then life happens to me and I have to pull money out of that trade, not based upon what's happened in the trade, but based upon what's happened in life. If you've done that, which I've done, it's a bad trade. You've put too much money in the trade.
From the start,
from the start.
Yeah, and you don't even recognize it, right?
No.
You get in there again, and the thing I guess we're trying to say here is this is what pretty much everybody goes through, right? These are the same thoughts, these are the same beliefs, these are the same, things that people do over and over and over again, right? So the real trick is understanding what is risk. Not only, and not only understanding what is risk, but being realistic about risk in your life. This is the problem. Everybody, they wear YOLO and DGen like a badge, right? Why would you do that? Listen, the fact is you have to, if you want to create real wealth, right? It does require concentration, right? You're going to concentrate. You can't get to real wealth diversifying, but you have to be realistic about what you're doing. If you don't have a safety net as it is, and you're getting in concentration here in hoping that whatever you're concentrated in is going to go up significantly enough to create that wealth, you have to understand the amount of risk you're taking, which means what? It means, guess what, folks? You got to do the hard work first. You got to get yourself into a position where that concentration is not as risky. You have to, everybody's in here and they're like, everybody complains about how much things cost. I'm not saying they don't cost a lot, right? The prices are up. These things are out. This is real. But at the end of the day, how many of those same people are buying their $7 Starbucks, are going out to eat a few times a week, are going out drinking with their friends on the weekend, are doing, have multiple streaming services, right? And so the reality of it is people aren't being real, right? They're saying, oh, everything's so tough, which it is tough, but they're making it even tougher on themselves. And by doing that, they can't put themselves in a position, first of all, where they're stable, and then they can start,
well, the
concentrating.
way I look at that is this, okay? So you have to break the cycle of failing in order to start winning, right? You have to actually start taking W's. You're a sports team, you yourself and I. And everything that you put $1 into is you playing a game. So if you lose money on that dollar, you took an L. If you make money on that dollar, you took a W. It's just that simple. And everybody's playing this game, and everybody has the same field, and everybody's got pretty much equal opportunity. There's infinite ways to make money on this field of game, right? So when you're out there, when you have opportunities that are too good to pass up, which are not very frequent. They come very rarely, very rarely.
A lot more rare than most of us think, right? Everybody's trying to remember the next day. This coin is the next big thing, right? I mean,
a lot of people will say the rich guy was just in the right place at the right time. I'd say, yeah, he was, or she was, but she or he was also ready for it to happen.
There you go. They were prepared.
They were standing there waiting for that Nexus event to take place because they knew it was going to take place, and they had built everything of their strategy about that happening. Well, you've got to look at these markets the same way. It's like you don't know when it's going to take place, but there is going to be a Nexus event, and you're just looking for those Nexus events to take place. And if they do, you're going to make a lot of money. And if they don't, then you need to lick your wounds and admit it and move on to the next one as quickly as possible. The no is the second best answer.
What's first?
Yes is the best. No is the second best answer. Yes is the first best answer. And a long no is the worst best answer. So if you're sitting on the no, you're doing yourself a disservice. You could have made an earlier no decision, and that would have been the better decision. Act quickly is the point.
Honestly, man, I love the point you brought up there. It's so real. This idea that, people will say, oh, the rich person was there, was in the right place at the right time. We're all in the right place at the right time. Most of us are just not prepared, right? We're just not understanding that that's the right place at the right time, right? So people that are, let's say that got in, 2017 or before in Bitcoin and held, and people today will be like, oh, you were lucky. Well, first of all, we took on a lot more risk than you're going to take on today, right? Again, as you pointed out earlier, Bitcoin is in a much better place today than it was 10 years ago, than it was 15 years ago in terms of, institutional adoption, government, allowing it, all this kind of stuff. So you're, on a risk-adjusted basis, this is something that Gary Cardone and I talked about, even a year ago. On a risk-adjusted basis, you are so much better off buying Bitcoin today than you were when you and I were first buying it 10 plus years ago, right?
Well, if the market had, if the network had failed or had been attacked during those infancy years, which would happen now. Let's just say you tried to say, I'm going to create Bitcoin 2.0. As soon as you got to the toddler phase of the network's growth, you'd have every attack known to man because there'd be enough liquidity there for you to rake hundreds of millions of dollars out. But it also would be small enough where the attack would be plausible and you could do it. Bitcoin was very unique. It grew organically because it was a people's network before anyone knew what that was. And so it got critical mass and it built up a history of data that made the library of its chain so heavy to compute that every new block is not the part that you have to hack. You got to hack all the other blocks.
Exactly.
And so
it becomes infinitely more expensive.
Yeah. So you look at Bitcoin and you go, it's 95% through a fair and equitable distribution through proof of work. It's built the biggest network with the largest data set that man's ever built, and it's owned by the people for the people. It is the king daddy of proof of work, and it will never be duplicated in my mind because everyone's hip to the notion now. All the abusers would come out early and often and take advantage and brute force attack it. And I can show you other proof of work networks that have had the brute force attack happen to them regularly, honestly. So everyone had to move from proof of work to proof of stake. That was why people moved to proof of stake, honestly. Yep. And so proof of work, for all intents and purposes, was for Bitcoin and Bitcoin only in my mind. And what a beautiful thing it was. And I say that past tense because we don't need it anymore.
Yeah.
You can send Bitcoin in a lot of different ways that don't involve sending it across the Bitcoin network. And that's going to be here to stay. And that's probably where, at some point in time when we're far from this, maybe 20 years in my mind, but at some point in time, it will cost more power. It will cost you more in power than it will in Bitcoin mining reward. Yeah. And that's when the network says, well, we did our job and we retired. Or you have just people doing it at a loss because they love the network, right?
Yeah, there you go. Right. So we got a question here. Let me preface this question by saying we're not giving you financial advice, folks. We can't do that. We're not registered advisors, anything like that. So, these are our thoughts, based on our experience. Tillman, and myself and Andrew have been in the markets for, decades now. Tillman himself specifically ran a Bitcoin mining farm basically back in the day. So when he's talking, Bitcoin and these ideas, like what he just said here about energy, whatever, I mean, this is not just some Yahoo coming off the street and just tossing up whatever. This is based on real experience and continuing with it. That said, the question here is, so let's say you want to look after yourself and your family and sell some Bitcoin to cover expenses until the next bull market. Is it better to borrow against it or just sell and do it cleanly?
That is a great question. And the answer lies, and this is why we can't give you financial advice, because it lies in the individual need. Let's just say if you have $2 million in Bitcoin and you need 100 grand, borrow the Bitcoin, borrow against the Bitcoin, because you're never going to get liquidated on that loan unless Bitcoin goes down by 95+%, which is a risk that's acceptable to me. This is my own personal shoe trying on in front of you. But if you have 100 grand in Bitcoin and you need to borrow 50 grand, borrowing is not a very risky scenario for you, or a much more risky scenario, because if Bitcoin's price goes down by 30%, your exchange is going to start sending you emails. They're going to say, hey, you're down by more than 50% of your loan to value ratio. Just putting a heads up, you might want to put some more money in your account, because if it goes down by the same amount that it already has, we're selling your position. Your Bitcoin is ours. So the amount of money you need as it relates to the amount of money you have is where that answer lies.
Absolutely. And again, this is, as somebody who posts charts and, talks about investing and, psychology and stuff like this online a lot, I often get these questions. Well, what should I do? What should I do? And I always tell them, listen, I'm not a registered RA. I can't tell you what you should do. If I'm looking at things, generally speaking, if this is what it is, here's the things you have to consider, right? But I see these same people and others talking to everybody else online. Everybody else being, oh, you need to do this, you need to do that. Well, again, the first thing being, listen, folks, stop asking people not qualified, not licensed properly, what you need to do, especially if you're not, if they're not asking all the pertinent questions. But again, here in the US, you have to have an RA license if you're going to tell somebody what they specifically should do
Well, I
That's
would
gonna create
disagree with
something.
that a little bit. Listen, if you want
Well, you
formal
can't
advice,
disagree with the fact that you have to have the license to do that. You can't
no, of
disagree
course
with that.
not. No, of course not. You have to have a license to give financial advice. And so financial advice is the reason what they're saying is that person's responsible for understanding your situation
Exactly. Your
and
specific
giving and they're giving you advice against your specific situation, right? Listening to someone who doesn't know you about what they've done and their experiences are and misconstruing that as financial advice for you is not something. You shouldn't do it. Anybody who's telling you what they've done, number one, there's a lot of details that have been left out that you're not
Yeah,
privy to, tons of
exactly.
details. And most human nature highlights the good stuff that makes you feel real good and ignores the bad stuff.
Minimize all that bad
Yeah, so
stuff.
you're getting the rosiest version of the story from everybody. So assume that, number one. Number two, assume that most people are looking for clips. If they're making a living online, and you ask yourself, do they make more money on their subscriptions on social than they probably are fabricating a lot of
Yes.
that story for clips, right?
Yeah.
And for the views. And they had to think, you know what's going to get people's minds engaged with this? What's going to get them retweeting it? And that's the reason why you're responding it is because they're good at their jobs.
Yes.
That's really what,
exactly.
what a dementia is. They've elicited a response from you. But what I do agree with doing, and I do this myself, is I listen to smart people that I think are smart, that I think I want to think like.
Yeah.
And if they're saying things I don't understand or evoke a negative response in myself, like people have said to me, my dad has said this to me all the time, when I was young especially. Laws of compounding are the most powerful forces of nature. You should just be chasing an 8% yield, Tillman. Set it and forget it. Don't be doing all this crazy stuff. And I like, yeah, forget about that.
Man, go get rich quick like that, Dad.
Yeah, that's not where the fun is, Dad. Yeah. But that evoked a response in me. And the response was, I'm smarter. It was pride.
Yes.
Right? It's yeah, that's for the dumb people, Dad. I'm the smart guy who can figure it out earlier. Well, guess what? If you think that and you stick to it long enough, a broken clock is right twice a day. You will hit the lick. And God bless you. Run for it. Take it off the table because it ain't happening again. But if you think that you're going to go into that and it's going to be the first swing at the plate, you're a fool. And you may, and if you hit that, God bless you, because you'll be the greatest fool, because you'll be thinking you've got the Midas touch and number 2, 3, 4. And I've got stories galore to support this. Yep. But, you've got to go into it going, I don't want to strike out. And I just want to build a credible record of putting money out there and having more money come back. And if you do that, then it requires you to take a much more humble approach of going, I don't know, I'm right. I may be wrong. And if I am wrong, I'm okay with it because I've scheduled it within proper ratios in my portfolio, right?
Yeah. And that's, man, that is the whole underlying thing of what I do at TexasWest Capital. People come in, and some people come in and they think, oh, I'm doing it just so, that they think they're going to join just so they can learn, about how markets work or whatever, which I think we do absolutely better than anybody else. We give you clear understandings and explanations. But really what you're getting, like when you come into something like TWC, is you're getting me constantly reminding you, this is what people tend to do. Exactly what you said. You're going to think you're smarter. You probably already did coming in, right? But yet here you've been in the market a year and you've lost money. Or if you're lucky, you've broke even. If you've broken even after a year, you're doing better than most. But still, that's a year.
Have you ever met those hopeful, hopeless romantic people that stay single their long portions of time in their life, but every person they date, they're going to marry and they're the one? and they're just like infatuated and in love. He's so great. She's the best. She's the one. But you kind of, at some point, it's like the boy who cried wolf. You're just like, yeah, I'm happy. And you stop talking good or bad about them, because you really just have to hedge your bet on the history. But if you're going to make the home run swings, if you think every investment you get into is a home run, you have to think you've deceived yourself with emotion, because the home runs are, you play the game, you bat at, the home runs happen after you've swung the bat and hit the ball 30 times.
Yeah.
You know what I mean? Like it's just like baseball. They don't happen to even the best players very infrequently.
Yeah. And so, I think that's, again, what we've basically talked about this entire show, which is we've talked about different things, but it always comes back to
the only thing you can control.
Yeah, exactly. Are you realistic with you, with your views? And you know what? I'm going to tell you, everybody listening in, I'm going to promise you, you're not. and at least not on any consistent basis. And it's the one thing I had to learn, again, as growing up, had to unlearn the things I was taught and learn these other things, but it's an everyday thing. It doesn't just automatically be that thing, right? You still find yourself in situations where you think you're smarter than you are, where you forget or you choose not to do the things that you've learned that have gotten
still
where
do about Bitcoin. Is Bitcoin old compared to gold? No. What Bitcoin is in 100 years, they're going to be either calling us geniuses or the fools of the early 2000s.
We'll be dead either way, so we won't know.
But my point is that history is a harsh judge, and most everything fails. So the question is just how do you make money while it's not failing and get out before it fails? That's 100%. Really what it amounts to.
Exactly. Even if you believe that Bitcoin's the future and it will be the future, the reality of it is something could be created 30 years from now that is fundamentally different than Bitcoin and proves to be better for what, government and markets and whatever want. And guess where the attention's going to go? I mean, it is what it is. So the goal is, listen, get in, to things that are doing well while they're doing well, but don't ever think that you're smarter than history or smarter than the future. Ride it while you can, make the money while you can. Important to take profits along the way. So that way, if it hits that point at some point where it doesn't do what you think it's going to do, because as Tillman said, most things are failures, right? Most things fail in life. Then at least by that point, you're still really, really well off. You're still doing really good.
And the more good people talk about you, be prepared, because the bad's coming. You look at some of these treasury companies. I won't name names because I don't want to kick people while they're down. But I care about a lot of these guys. They're industry pioneers, and some of their efforts, they're down half of their MNAV value. It's like a negative MNAV, which is just like a 0.5 MNAV, which means, for everybody who doesn't follow these things, it means that they hold twice as much Bitcoin in physical possession as their share price represents.
Undervalued.
Which means like you're not doing so hot. And they went from, like, I think a lot of these companies are down 95% on their IPO price. So it's a rough time for them, but they were the belle of the ball. And that's a good example of when you attach yourself. If you find yourself going, I want to be a part of the conversation, I want to be in the belle of the ball, that comes with a lot of downside. So, if you're joining that party late, you're going to be cleaning up after the party, is the point.
Yeah. Nobody wants to stay after and clean up. We all want to go home drunk, happy.
That's right. Right. You want to leave at that perfect moment where none of the cool people have left yet, but you're kind of walking out with them. So it looks like you're going to the after party with them. That is when you want to leave a stock, for this analogy's sake.
Don't forget it, folks. You heard it here first. All right. Leave the party at the
with the cool crowd. That's
point,
called
right?
the institutional investors. When you see them leaving the party, get out with them. They're typically the cool crowd.
There you go. Well, I guess we've kept them entertained long enough for the hour here. Guys, listen, we appreciate y'all showing up every week. We enjoy what we do here. We hopefully make a difference, a positive difference in your life. Just trying to get you opened up to, again, this idea that, we're often not as good as we think we are, but there is some experience in what we discuss here. Going through multiple iterations of we find out that we aren't as smart as what we thought we were. And our goal here is to share that information and hopefully help you navigate a lot of the issues that come up with Bitcoin and markets and, the future of what's coming. Because, man, oh, man, I got to be honest with you. People were not so excited about economics and global finance and whatnot when I first started right out of high school, 30 years ago. And so it's great to see them here now. Now we just need to get them up to speed. But there we go, folks. So that'll be it. I hope you guys have a fantastic week, an even better weekend. We'll be back again next week, as always. Same time, same channel, same location, wherever you're watching this from. And maybe Andrew will grace us with his presence.
Yeah, he should be. He's driving to Colorado right now on a road trip so he's in the middle of probably Kansas with no reception.
Hey, you know what? I said Andrew. You said he's on a road trip. My first thought was National Lampoons, man.
Yeah.
Vacation, right?
I don't know. He was in a beat up. Andrew, if I have to guess, is in either a Porsche or an AMG or something that warrants a road trip.
So it'd be the high scale road version of National Lampoons. Then
that's exactly right. Yeah.
I still think he's Chevy Chase. So I mean. All right. Thanks a lot, guys, for joining in as always. Hit the like, hit the thumbs up, follow everybody here. You can follow Tillman. He only wants you if you're a quality follow, though. He says he does not want to be a KOL, but you can follow him at TexasOL61 there.
Truthfully, I've met people on here that I then met at the Bitcoin conference, and now we're doing business together. So I just like genuine relationships. I'm not here to get just
to get all the followers. If you guys want to be a part of that, you can follow Andrew, AP_Abacus. He's like, gimme followers. So,
he says things to piss people off to get pissed off followers. Riddle me that. I mean, you want to attract people who hate you and have an open voice in your life.
He has fun, though. You can follow me, TXWest Capital, guys. Listen, I'm not going to say anything other than what needs to be said. So y'all take care. Have a great week, and we will see you next time. Tillman, thank you so much, sir.
You too, appreciate Chris.
You.
See you.
Take care.
Bye.
Trading tip: always manage risk before chasing gains.